Greetings, my dear students. Let's have a discussion on some of the topics relating to optimum or optimal capital structure. The topics I want to discuss with you, its meaning, the graphical presentation of optimum capital structure, and what are the essentials of sound or optimal capital structure, and pattern of capital structure. Okay, let's see the optimum capital structure. Okay, every company that expects to have an optimum or appropriate capital structure that we know. Okay, the purpose of capital structure decision is to maximize the value of the firm, maximize shareholders' wealth. So, what is an optimum capital structure? This capital structure which maximizes the value of the firm. Okay, it refers to a most economical capital structure. In simple words, it is the mix of debt and equity that maximizes the value of the company and it minimizes the cost of capital. Okay. In the words of Solomon Ezra, optimum leverage is that mix of debt and equity which maximize the market value of the company and minimize the company's overall cost of capital. Overall cost of capital means weighted average cost of capital. So, an optimum capital is a capital structure at which overall cost of capital or weighted average cost of capital is a minimum and the value of the firm is maximum. For discussing this, let's take two situations. In the situation 1, when a company uses more debt, then overall cost of capital will be less. That is leading to higher EPS, higher return to equity shareholders. Finally, but the problem is the shareholders will have to bear higher risk. The market value of shares increases means EPS increases, market value of shares increases. But the problem or issue related to this is the shareholders will have to bear higher risk. Then see the situation 2. Company uses less debt. Overall cost of capital will be high. That is leading to lower return, lower EPS to equity shareholders. This will lowers the market value of shares and equity shareholders will have to bear lower risk. So, the thing is value should be get at its maximum and this should be at the minimum. So, what can be concluded from this? It is there should be a trade-off or balance between risk and return. So, it is optimum capital structure at which there will be a balance between risk and return, that is enhancing the price of the shares, equity shares. Okay, let's discuss the optimum capital structure with the help of a graph. For this, we have to consider the relationship between financial leverage. Financial leverage means debt equity ratio, capital, cost of capital and value of the firm. All these are represented with the help of a graph. Okay, see the graph. Okay. Yes. The graph shows the firm's value is maximum when its cost is at the lowest. See, in the x-axis, debt equity combinations. In the y-axis shows cost and value and debt and equity proportions. Okay. Then it is a point. A dotted line represents a point at which the value, the dotted line means OR. Dotted line represents the value is at the maximum and cost is at the minimum point. Okay. This occurs the debt equity ratio of OR. The value of the company is at its highest when the point is OR. Any other point, we consider any other point, any other debt equity ratio, and back to OR or front to OR, then or in any of the case, the value it would reduce the value and increases its cost. Reduces the value and increases the cost. So, the optimum capital structure is represented by the debt equity ratio at which cost of capital, cost is at the lowest, that is U shape, and its value is at the highest point. Okay. Next topic is, what are the requisites or essentials of sound or optimal capital structure? Requirements for optimal capital structure. No ideal or optimum capital structure suitable for all types of companies. Okay. So, our first point is balance. There should be a balance between different types of ownership securities and creditorship securities. Another point is economy. They should ensure the minimum cost of issue and financing. That means financial risk should be the minimum. Another point is liquidity and solvency. Liquidity and solvency. While designing the capital structure, weightage should be given to liquidity and solvency. Liquidity and solvency of the company. For example, any debt that threatens the company, okay, solvency of the company, it should be avoided. Okay. Next point is flexibility. Flexibility means easy to possible to raise funds when it is required. So, the same situation to repay them when they are not required. Okay, the capital structure should be such that possible to raise when it is required and possible to repay them when they are not required. Okay, that is flexibility. Then what is simplicity? Simplicity is right attached to each class. The capital structure should define the right attached to each class of security. We know the right of preference shareholders and security holder means equity shareholders are different or debenture holders are different. So, it should clearly define. Capital structure should clearly define the rights attached to each class of security. Another is safety. It must ensure the safety of their investments. Another point is maximum return. These are the common points. Should provide maximum return to equity shareholders who are the real owners of the company. Another point is maximum control. Generally, equity shareholders have the control over the affairs of the company. Preference shareholders and debenture holders have only limited control. Therefore, capital structure should be designed in such a way to preserve the control of the company's management in the hands of the existing shareholders only. Okay, that is a maximum control. Another is balanced leverage. What is balanced leverage? An optimum capital structure must ensure to achieve balanced leverage by issuing all classes of securities. Company should issue all classes of securities. Means the situation is different for shares and debentures. Shares are issued when the rate of capitalization is high. When the debentures are issued when the rate of interest is low. Okay. All these are the requisites for the sound or optimal capital structure. Okay. Let's see a simple topic. Then pattern or forms of capital structure. No, there is no ideal pattern. No ideal pattern suitable for all companies. Okay. So, capital structure depends upon a number of factors. Those factors we studied, capital structure planning, internal factors and external factors are there. Okay, in case of a new company, capital structure may be in the form of, some of the 4 patterns. First one is equity shares only. Some companies may depend upon equity shares and preference shares. Others may be with equity shares and debentures. And some other companies may have financial plans with these 3. Equity shares, preference shares and debentures. Okay, if all these are in the case of a new company. If it is an existing company or a going company, reserves and surpluses also constitute a major part of capital structure. Okay, all these are the different forms of capital structure. Okay, Thank you. I think you have a clear idea about the various concepts relating to the optimum capital structure. Okay. Thank you all.